oil. There are a lot of traders that speculate on oil. Lots of events took place this year that could impact oil, that caused it to run up into the 90s. Just a couple weeks ago, it was down at 68. It's been floating between 70 and 75 right now. You know, we've had Ukraine, this Middle East conflict that started in October. We've had OPEC Plus kind of battling with each other with cuts and so on. How do you see the action in oil in the first half of 2024? I mean, they've done everything they can to bring it back to $80 and hasn't worked so well.
Yeah.
What's your view there? I don't know if it's something you analyze much, but I'd like to hear your opinion on it.
Yeah, I think oil is an interesting market. In many ways, you want to think about it sort of, it's almost two different markets that intersect with each other, which is it's a paper market in terms of, you know, money, fast money speculators, and then it's a real market in terms of there are people, you know, who consume oil and produce oil and things like that in the market. And so, and you sort of have to balance both of those things at any point in time. And the ideal moments are when those two pressures are sort of moving in the same direction against, you know, a valuation that's in the opposite one. So when I think about that context in the real demand, in the real market, you know, the oil situation has been one that has been, you know, there's a lot of supply. Like U.S. supply in particular is just, you know, the U.S. just keeps hitting new highs in terms of supply, and most of what can be done is OPEC, and particularly Saudi Arabia, are just trying to take barrels off the market so we don't get a big price decline. And they've done a pretty good job of that, and they have a lot of flexibility. And I think that, you know, that kind of makes sort of, let's call it the natural position in oil, like in the 80-ish range, right, which would keep up with the demand dynamics, which are going to be decent, with, you know, the supply that's happening, a little bit of Saudi Arabia coming off the market. I think the real interesting thing is what's going on in the paper market, where we actually see hedge funds in particular and fast money really selling oil aggressively. I think it's one of those things where the intermarket action is driving things that are nonsensical, because what is happening from many of these funds is that they're seeing bond yields collapse. And what would, you know, if you go back to the financial crisis, you know, some people might not remember, like oil pressed well into the hundreds, right?
Yeah.
And well above $100 a barrel. And the financial crisis hit, and oil fell to, fell like 75% in the course of weeks. And so a lot of people equate the bond yield move with oil. There's an intermarket action dynamic that are trading those things off. And so I think what we're seeing is that that's causing a big paper short to emerge in the market, which is not really consistent with the underlying fundamentals. And so if we were to get pressure off the bond yield, I think we're probably going to get upward pressure on the oil market in the context of, you know, a balanced market that is, you know, I guess we're like a little bit below what the right price, you know, we're still a little bit below what the right price is on a balanced market.